What's going on, traders? Andrew O'Connell here with Pristine Capital FOMC Day today. What a crazy day. If you watched yesterday's video, pretty much everything that we discussed came to fruition. Let's dive in. Let's start with our box scores. Today's also going to be pretty special. I'm going to share with you a new tool that we created for Pristine Capital members, and it is our Dark Index dashboard. I am super excited about this thing. One of my buddies, he's a data scientist. We've been working on this thing for weeks, and I'm going to share it with you today. So let's dive in here. Box scores: S&P 500 finished up 1.43%. The NASDAQ QQQ finished up 2.5%. Our IWM small caps finished up about 1.5%. Our dogs of the Dow lagged behind. They were up 0.96%. And our ARK Innovation ETF team, I'm still long my January of 2023 40 strike calls. It was up 6.57% today. You can see pretty much everything closed towards the upper middle end of the day's range. We did get a nice volatility crush. Overall breadth was pretty strong, and we finished off with 78.3% up volume. That said, my trend model is still at a -3. Now let's talk about today's news. We'll talk about Fed Wednesday also. So today we got the retail sales data month over month for May. It came out at a -0.3% reading. The market was expecting 0.2%. Now this is definitely, not so good for the economy, but the not so good economy, that's like a firmly entrenched narrative. And we all know that the economy, are we in a recession? Are we not in a recession? We already had 1 quarter of negative GDP growth. I would not be shocked if we had another one. But the market actually responded to this positively in a good news is bad news and vice versa kind of way. This did not deter the rally. And it actually, you could argue it helped treasuries rally, because treasuries typically rally when the economy is a little bit weaker. And the major issue in the market right now is that these treasuries have been super weak and they've been selling off. So counter to what many might believe, in this kind of market environment, a bad retail sales print can actually be a good thing. And then let's address the elephant in the room, Fed Wednesday. Yesterday, if you watched our video, we talked about how, basically everyone has capitulated after the CPI report. The market has priced in a 75 basis point rate hike. So Powell is likely going to deliver 75 basis points. I mentioned, hey guys, I am fully long, full transparency. If the market goes up, I'm going to make some money. If the market goes down, I'm going to lose some money. And everything was just par for the course. And this is the nature of the beast when you're interpreting a market event and what extent that the market event has been priced in. Like, this was like so forecasted. The bond market got it spot on. Equities sold off in tandem with the bond market selling off. So this was like, by the time we actually got to the event, there was no scare, there was no fear, because the market really got this right. So we got our 75 basis point rate hike. Other than that, Powell really just said, hey, we have these supply chain issues. We have these high energy prices. We're going to do whatever we can to ensure price stability. Basically, same old, same old. So yeah, Fed Wednesday came and went. And so far we had a nice positive reaction. Crude oil, month to date performance. Now, most players in the market, most people on Twitter, most talking heads, they are talking about the May CPI print. Now we're already halfway through June. So while everyone is selling off their duration sensitives because they're going, oh my gosh, inflation's out of control, we know from the calculation that we did a few days ago, energy was the biggest contributor to last month's beat on the inflation report. We had a 12% increase in energy for the month of May. So far in June, we only have a 1.01% increase in WTI crude oil. So what that's telling me is that next month's inflation data is very likely to be a deceleration. And then what's likely to happen? Everyone's going to have to take those long duration assets that they sold off for the past couple days, and they're going to have to rebuy them. And we already, we're seeing direct evidence of that with this ARK Innovation ETF being the strongest performer, in addition to the NASDAQ QQQ. The NASDAQ stocks, they have a very similar exposure to treasuries. So yeah, when treasuries rally, a lot of times, the NASDAQ rallies in tandem. All right, take a look here. Our Finviz heat map, nice and strong. And we see that energy was the weak link, which is just fantastic. This is the exact configuration that we want to see in the market. And this was 2 days ago. We shared this. We've been talking about it the past couple days. This was a sign that there was real capitulation in the market. This tick index hitting a negative 2,000 reading. What's so interesting is that 99% of investors, you could show them like, oh, here's a market correction. And here were all the signs that there was capitulation. And after the fact, it's so obvious. Anyone can see like, oh yeah, of course the market bottomed. We had X, Y, Z, A, B, C happen. Those things always happen. But in real time, it is so difficult to actually discern that there's capitulation going on. Because usually when that is occurring, that's when assets are really selling off. That's when your portfolio is hurting. That's typically when you're most fearful. Sectors, take a look at our map here. We had KWeb, it's still in our top momentum slot of 1.69%. But the big winners for today, as we mentioned earlier, were these long duration assets. Style factors for today, our big winner was the high beta style factor, which finished up 2.34%. And let's take a look before we dive into my trades for the day. Let's take a look at these indices. The S&P 500. We did have a pretty solid day today after just multiple days of selling. The trend is still definitely to the downside. But take a look, we have this 3,800 level. This was the prior low that we made in late May, and it has been acting as a resistance level since we cascaded below it. Now you can see in the after hours, we already started trading. We're just slightly above it. We're at 3,809, but you can definitely use this 3,800 level as a bull or bear pivot moving forward into the rest of the week. Our NASDAQ, very similar chart. We are trying to get back inside of this monthly value area. I actually traded some TQQQ today, which is the triple leverage NASDAQ ETF. Russell 2000, it's already back inside of this monthly value area, looking pretty solid. And the Dow Jones, this is actually like the weakest of the bunch. You can see this one still also well below that monthly value area. Now take a look, the VIX did get crushed today. The VIX was down 9.39%. You can see a long lower wick on this candle right here, but it is good to see that the VIX, completely filled this gap. We got up to a high of about 35 the other day. Very scary stuff. Now the VIX is trading below a 30, so that could be another good thing to watch. If the VIX starts climbing back above 30, then hey, maybe this vol event is not over. So long as we stay below 30, though, I think that is the happy path scenario. So let's take a look. We'll check out my trades for the day today. Let's start with options. So on the options side today, I actually had pretty high trading volume today. And today for me was very solid. So I sold these DigitalOcean June 17th 40 strike puts. I sold these yesterday and I had received a premium of $1.50 for those. DigitalOcean is a name that I really like. Want to develop a really big position in it. And today at 9:38, I sent out a limit order to buy those back for 55 cents. Well, that limit order ended up hitting and I bought back those DigitalOcean puts that I had sold for $1.50. So I was able to make a quick 95 cents on that trade, literally just in one trading session. KWeb. This one, I must say I got a little bit spooked out of the position. I'm already long some FXI calls, and those calls, they're up maybe like 70%. They expire in January of 2023. KWeb, I had some also June 17th 31 strike short puts. And I saw some headlines earlier today, and it was like, Russia and China, they're working together, that sort of thing. I noticed these were showing a little bit of relative weakness in the first 15 minutes. So I actually closed these out. I bought these back for 77 cents. I'd received 90 cents. So pulled this one off for a pretty small winner, but a winner nonetheless. And I actually freed up buying power by doing that, which actually allowed me to take that trade into TQQQ. And that one ended up being a really nice winner. So it ended up working out very well. I day traded some SPY June 27th 380 strike puts. Because what I notice is when there's a binary event ahead of you, like we had today, FOMC. Remember how the market just kind of pumped in the morning? The S&P 500, it was up like 1.5%. Into an event, whenever things hit an extreme, I love day trading for mean reversion because, most investment managers, they're not just going to like bid the S&P 500 up like 4% into the Fed meeting. A lot of times if there's some nice intraday gains, into the event, some profits will be taken, some poor location longs will get trapped, the punters that are just chasing stuff, and it presents some good opportunities. So I day traded this before I headed to the gym, bought these puts for 960, took off half for 1005, and I took the other half off for 1028. So I just wrote here a nice post-workout meal money. So yeah, those are my options trades. And then in terms of common stock, this was literally right ahead of the Fed meeting. I had raised some buying power because I bought back my short DigitalOcean puts as well as my KWeb puts. And so I got long these TQQQ triple leverage NASDAQ common shares for $24.42. I wrote here, I'm going to add to this position if we get the usual stopping out of all the punters post the announcement. And we did end up getting that. As soon as the announcement came out, I just looked, I said, hey, there's nothing unusual here. Market started pulling back. I'm sure all the day traders and whatever, pajama, punters, they probably got super spooked. I added to this position and I sized it up for $23.94. And then I took off a quarter of the position for about like a 5% winner. And maybe, yeah, I sized into this at 208. Took off a quarter of the position at 327. So I figured, hey, if I made over 5% on this in about like, an hour and 20 minutes, hey, that's fantastic. I just put here nailing down decent profits. That's something I really want to make sure that I'm getting better at. If I get a really nice profit, it happens very quickly, at least taking like a little piece of it off. And then at 219, I added to my Bitcoin position for $20,501. And this was part of the game plan. I added some at about 29K. And the game plan was if we get to 20K, fill out the position there. And I just put here, there will always be demand for an escape valve from this corrupt monetary system. Remember, team, one man's liquidation is another man's opportunity. So now my average cost basis for that Bitcoin is about 25K. So yeah, awesome day of trading today. Yeah, pretty much par for the course, what we were expecting as of yesterday. So now still very long, just gonna let things ride and kind of see what happens. Now let's talk about this dark index tool that we developed. So again, one of my buddies, he's a data scientist. I used to work with him at Vanguard. Incredibly talented. He joined our group and he actually partnered with me and we built out this dark index dashboard. And let me preface here, pretty much every day is part of our daily process for Pristine Capital members. One thing that we really love looking at is the dark index. So let's pull that up. And really the father of this analysis is this Squeeze Metrics website. And we always pull up this dark index. There's really good trading signals that you can derive from this. And I share those all with members, like my methodology for using this thing. But there's a really good white paper on the site. Talks all about why these dark pool buyers, they can provide some really good signals as to future asset returns. But the thing is, on this website, you only get the data for the S&P 500. So you don't get it for any other assets. If you want to get that, you have to pay $720 per month. And you get full access to all the dark pool data. I'm pretty sure there's analysis that comes with this. But my mentality was like, let's see if we can put together our own dashboard. Let's see if we can build this thing from scratch. And let's see if we can offer it to Pristine Capital members for no additional charge. So we've been working on this thing for a couple weeks. And these are really just like trend and dark pool dashboards that we created. So I break out my universe into a couple different, basically subcategories. I have broad markets, sectors, style factors, countries, fixed income, and commodities. And really what we're doing is, we're using a couple Python scripts. We have a database as well. We're pulling in all of this data and we just try to put it in a very simple, easy to understand table where you can just look at the tables and you can get a quick insight as to what's going on in the market. So you can see, like, for our broad markets, it has the days change, where it closed in terms of the days range, and then it has all the key moving averages that we track here at Pristine Capital. So we got our 200-day moving average, 50-day, 20-day, and then the 10-day EMA as well as the 5-day EMA. Now, red dots are if the asset is below the key moving average. Simple enough. Green dot if the asset's above the key moving average. So you can very quickly look at this and go, oh wow, the dollar index, this is in a strong uptrend on all time frames. And then not only that, a yellow dot is if the asset is within 0.2 ATR away from that key moving average. So basically it's just, hey, how close is this thing? Because rather than looking through all of these charts every night, what these dashboards will allow us to do is very quickly look, and we can say, oh, the TAN solar ETF, that is trading, wow, it looks like it's right by the 20-day simple moving average. And then you can pull up the chart for TAN and go, wow, we are trading very close to this 20-day. And then look at that. You know, now I find when I look at the chart, wow, we're very close to breaking out a value. If I'm interested in these solar stocks, maybe now this is suddenly on my radar. And it's just a very quick way of looking at the trend of an asset. And then not only that, really the main innovation here is that we are calculating a dark index for all of these ETFs. So we have a dark index, and originally when we started pulling this data, I was like, a dark index reading of 79, you know, it's a lot different than what we typically see on the Squeeze Metrics website. You know, dark index of 63, I got no context for this. So what we did was we put it in a percentile term. So the percentile is going to compare the dark index reading for that ETF that we saw today. It's going to compare it against the entire prior year's worth of data and see where it ranks within the prior year. So like gold miners, for instance, or no, not gold miners, this ARK FinTech fund. Yeah, FinTech stocks. They were a nice performer today at 4.86%. You can see the dark index percentile reading was 98.4%. So this is a really nice dashboard. I really like it. You know, I think it's going to help me in my trading. And I think for members, you know, it can also really help just to get some further insight on the market. And again, you know, if you try to go through that paywall, you're going to have to pay $720. And we're building out the same insights here just within our Pristine Capital membership. So yeah, you know, my goal with Pristine Capital, basically what we're creating here, this is just a fantastic community. You know, whether it's the trading alerts, whether it's the day-to-day analysis, the news feed, the Discord bots that we have, you know, these tools that we're building for investors and traders, our goal is really just, you know, whatever you're doing with your trading business, you know, if you're an amateur trader and you really want to level yourself up, this is the ideal place for you to be, because we all love trading and we're not punters. Like you notice me in a lot of these videos, I always like joke around about like punters, because I feel like most of these trading groups, that's really all it is. It's just like, okay guys, every morning I call out 50 different stocks, I call out 25 longs, 25 shorts, I call out a 10 delta option for each one of those names to the long side and the short side, and then I cherry pick the ones that worked and like, you know, whatever. And it's just like so non-realistic. So we're just trying to create the world's best trading community. That's really our goal. So yeah, definitely go to pristinecapital.net. If you've ever been interested, if you've been watching these videos for a while and, you know, this seems like something that could interest you, go ahead, sign up on our website. Feel free to reach out to me. I'll send you a discount code if you'd like. So feel free, go ahead and do that. Leave a comment on the YouTube video if you're interested, you know, whatever. We would love to have you. With that being said, that about does it for this market recap video. Hope you all enjoy the rest of your evening, and I'll see you all tomorrow.